Here's one of the anomalies to pay attention to. We have an anomaly called Elon Musk. And when you encounter someone like Elon Musk, there are a few things you do. The first thing you do is do not compete with Elon. It's not good for your health or your wealth. And so if I was GM of Ford or Stellantis, I would just take my ball and go home. I would not play that game.
Wow.
And but what they're going to do is they're all going to play the game. They'll all lose a lot of money. And in the end, they will all cease to exist.
Hi everyone, JJ here. Welcome. Well, today we're going to look at what Mohnish Pabrai said about Elon Musk being an anomaly, what he meant by that. He talks about anomaly-based investing and how he goes about that. So let's get into it.
Car dealerships are a great business, but then, there's this looming threat of EVs, where people think that there'll be a lot of EVs, which may not need a lot of parts and service. But the EV stuff is a little far out. And I think now, given what the three OEMs are doing, it might be even further out. And basically, if Tesla makes a 10% margin, then all the GM, Ford, and Stellantis will never make a dime on any EVs, because their costs are going to be much more than 10% more than Tesla's.
Well, that's a big call. He's saying that the other companies won't make a dime on EVs, and Tesla's pretty much captured the market. Of course, there's BYD in China too, which is making a lot of cars and selling a lot of cars, as many EVs as Tesla is, but they're doing very well in the Chinese market.
So they will want to delay, and they are delaying the transitions as long as possible. In fact, if they were smart, they would just run the business in runoff, which is not invest in EV.
Wow, he's saying that they're right to delay it and they shouldn't even try with EVs because they're not going to catch Tesla.
Here's one of the anomalies to pay attention to. We have an anomaly called Elon Musk. And when you encounter someone like Elon Musk, there are a few things you do. The first thing you do is do not compete with Elon. It's not good for your health or your wealth, So we have a anomaly there. And so if I was GM of Ford or Stellantis, I would just take my ball and go home. I would not play that game.
Wow.
But what they're going to do is they're all going to play the game. They'll all lose a lot of money. And in the end, they will all cease to exist.
You mentioned the companies Ford, Stellantis, and GM won't exist because of EVs, and they're going to try and compete against Tesla, against Elon Musk, who's the anomaly. He talks about anomaly-based investing, which we'll get into. He's a value investor, mind you. And he knows a lot about the auto industry. He's made a lot of money from Ferrari. He recognized that before it was a spin-off, but he said he got out too early. But he's recognizing here that Elon Musk is an anomaly, and you shouldn't compete against Elon Musk because you're going to lose. He's talked about Jeff Bezos being an anomaly as well, and saying that the auto industry is really going to change and that Elon Musk has a grip on the auto industry, if I'm reading him right.
That's just the way it is. But in the meantime, the car manufacturing is a terrible business. Car dealerships are a great business. And I think the market doesn't get it.
He's recognizing here that it's changed, the industry's changed, and that these companies, these legacy companies that aren't keeping up, shouldn't even try and compete because it's a losing battle. Now, if you're getting value out of this video so far, I'd really appreciate it if you remember to hit that like button to help the algorithms to spread it to more people, because that's what we want. Thanks.
Auction-driven markets have this peculiar characteristic that they can swing quite extremely in both directions. When you have these fractions of businesses trading on the New York Stock Exchange or the NASDAQ, the fraction of a business can be valued quite differently from the way the entire business would be valued in a negotiated transaction. So when you see those kinds of extremes, and if you had a heuristic which said that that's the only time I'm going to act when I see extreme behavior or extreme situations,
this is when he starts talking about anomaly-based investing. And of course, auction-driven markets can have that. We talk about Mr. Market from Ben Graham, where a bipolar Mr. Market who can give you prices that are way too high or way too low at the extremes. That's what he's talking about here. And value investing, of course, is taking advantage of those opportunities. If the price is way too low, rather than if it's in a bubble, the other extreme, don't go near it, he says. And then if it's too low, that's when you think about buying. If it's a good business, of course, Ben Graham didn't just buy good businesses. He bought not good businesses, just at really good prices, and the price often went up. But that's not how, say, Warren Buffett or Mohnish Pabrai really invest these days for the most part.
We practice what I would call anomaly-based investing, weird things happening that make no sense. So we are in a business with a high error rate, and if we focus on anomalies, then those become interesting. And so you need to have your radar up for whenever anomalies show up. And I think 4 years ago, I was in Istanbul.
So this is where he starts talking about Turkey. He's got investments in Turkey. I've talked about that in previous videos. Turkey itself, the whole market, when he looked at it, he found an anomaly there that things were priced too low. Of course, there was risk with inflation, hyperinflation in Turkey, and so there's macro risk, but he does talk about that. He invests in businesses that basically make money outside the country in US dollars or euros or whatever. That's one anomaly, is looking for markets that are undervalued, and he's able to do this around the world. He has said that he hasn't really found much in the US at all to buy in recent years, but opportunities for anomalies, you have to look for them. I'm going to talk more about how and where to find stocks, where I find my stocks. I'm going to talk about that mostly on Patreon. If you want to join, I'll put a link in the description.
So basically, the job description is reading and thinking. And so I'm always reading, I'm always looking at different things. And I'm always trying to just make sure that if I encounter something that doesn't make sense, that then I, take a pause and, at least look at what is going on.
As he said, keeping your radar up for anomalies that might come around not very often, maybe once a year, maybe less than that. Charlie Munger once said that he read Barron's for decades and he really only found one idea from there that was worth following up in depth. That's a lot of information, and Munger was reading all the time, taking in information and sifting out things that weren't good quickly, and then diving deeper into things that were interesting, but not investing very often, but then swinging big when an opportunity comes along that is actually worth it. There will be some wrong decisions. Pabrai said that investing has a high error rate, and that's okay. Even great investors have an error rate. Everybody's going to make mistakes. Hopefully more than 50% are going to do well.
And, these anomalies show up in all kinds of places. Another place where some of these things show up is 13F filings. So, there's professional investors who have over 100 million invested in US markets have to every quarter disclose what they own. So you could look at the Berkshire Hathaway 13F, or you could look at Bill Ackman's 13F, or whatever investors you admire.
And the 13Fs, this is another talking about finding anomalies, where to find stocks, where to find good ideas. He's not necessarily talking about copying directly. He talks about reverse engineering those, but to find anomalies, I definitely do this. I look at 13Fs. I've made lots of videos about this every quarter where 13F filings come out by super investors, and look at their filings. I'm looking for small cap stocks. So some of these big funds really don't invest in small cap stocks very often, but some of them do. So I look at them, and it's not a question of just copying them. It's a question of filtering down. These are great investors, so why are they investing in these stocks? Digging in deeper, it's a way to narrow down the pool, because there are tens of thousands of companies' stocks, public stocks around the world. So how do you narrow it down to a few? You can look at what great investors are investing in and thinking about why they're doing that and investigating why they're doing in that. And this is what Pabrai says. He talks about himself being a shameless cloner. That doesn't just mean copying other people's investments blindly. It means finding out what other great investors are doing, looking into what they are investing in and why.
You can look at their 13F and you can try to reverse engineer why did they buy that stock, right? So why does Bill Ackman like Chipotle? Or why does he like the railroads? And it's in many ways, it's investigative journalism, which is a lot of fun. So basically you go down a rabbit hole to try to figure out what was the reason. So sometimes when I see things on 13Fs, I'm not really interested in buying or selling or anything. I just want to understand why that particular individual did that. And when I figure out the reason why that person did that, then I can make a decision. Well, do I agree with that or disagree with that? Is it enough of an anomaly? What's going on? And then take it from there.
So some really great insights there from Mohnish Pabrai, I think, about what he calls anomaly-based investing, finding those anomalies wherever they are in different places. Have you found any anomalies in different areas? What do you think? Let me know in the comments. Now, if you're watching this on YouTube, I'm going to put a link here to a previous popular Mohnish Pabrai episode about how he invests. And here I'm going to put a link to a video that YouTube thinks that you in particular should watch next. And don't forget to check out the Patreon link if you haven't already. Hopefully I'll see you over there. And thanks to everybody for watching or listening, and I'll see you in the next one.